Are you seriously going to sit there and let the IRS pocket up to 30% of your hard-earned portfolio without a fight? Did you know that in exactly 18 months the government is scheduled to automatically sunset the single biggest tax protection act of the decade? Why is the mainstream media completely silent about the massive bracket jumps hitting standard brokerage accounts? Why are smart money investors aggressively moving their cash out of traditional accounts right now, while everyday folks are walking straight into a trap? Are you blindly maxing out your contributions, only to hand a third of it back to the government when the system resets? What if I told you there is one specific legal loophole the top 1% is using to completely bypass this upcoming tax hike? Today, we are breaking down exactly how to protect your wealth milestones before the door slams shut. So, what's the real play here? Are you just going to take this upcoming tax hit sitting down, or are you ready to pivot like the big dogs? Let's talk about how the smart money handles this mess. How do the top 1% consistently dodge these tax hikes while everyday investors get absolutely fleeced? How do they manage to stay completely bulletproof while the IRS tries to shake down every standard portfolio in the country? The answer isn't magic, it's asset positioning. They aren't panicking about 2026 because they are moving their capital into 3 specific heavy-hitting tax shelters right now. Let's be real for a second. How do the top 1% consistently dodge these tax hikes while everyday investors get absolutely fleeced? How do they stay completely bulletproof while the IRS shakes down every standard portfolio in the country? The answer isn't magic, it's front-running the system. The smart money isn't panicking about 2026 because they are quietly shifting capital into 3 specific, heavy-hitting shelters right now. First up, the Roth pivot. Look, we are sitting on historically low tax rates today, so the wealthy are choosing to pay their dues right now to flip traditional accounts into a Roth structure. Why? Because once that cash is inside, it grows completely untouched and pulls out 100% tax-free. They are locking in today's cheap rates before the government jacks up the price. Let us dissect exactly how this works on a mathematical level, because this is where most retail investors completely miss the boat. When you leave your money inside a traditional brokerage account or a standard tax-deferred vehicle, you are essentially signing a blank check to the federal government. You are agreeing to pay taxes on an unknown future rate on a much larger pool of money. The top 1% looks at that deal and laughs. They realize that paying 15 or 20% on a seed today is infinitely better than paying 30 to 39% on the entire harvest tomorrow. That is why the rush to convert is happening behind closed doors right now. Next, they are parking heavy liquidity into tax-sheltered real estate. They are using specific depreciation write-offs to legally erase their income on paper, shielding massive gains completely from ordinary tax brackets. It's the ultimate flex for keeping your wealth milestones out of the government's hands. But how do you actually access these real estate benefits if you are not a billionaire developer? This is the core problem the mainstream financial gurus never tell you. The smart money uses specialized structures like cost segregation studies and multifamily syndications. These vehicles allow you to take dynamic paper losses in year 1, effectively canceling out your active W-2 income or stock market gains. While the average investor is writing a massive check to the Treasury Department, the seasoned investor is showing a net zero liability on paper while their net worth increases in the real world. But the final play, the one nobody in the mainstream media is willing to talk about, that is the untouched capital bucket. They are shifting active cash straight into specialized physical assets and alternative private placements that sit completely outside the standard capital gains tracking grid. Think about it. Why do you think institutional wealth has been quietly flowing into private credit markets, specialized physical commodities, and foreign asset jurisdictions over the past 2 quarters? They are removing their footprints from the standard system. When the calendar flips to 2026 and the IRS drops the hammer, these off-grid capital buckets will remain completely invisible to the automated tax collection algorithms. It is not about breaking the law. It is about using the exact complex architecture the lawmakers built for themselves. So how do you actually execute this play before the clock runs out? Do you keep risking your capital on the exact same generic advice that's setting up millions of investors for a massive rug pull? Or do you take the exact 3 steps the top 1% is using to stay bulletproof? Step 1. Audit your current tax exposure immediately. Look at your standard brokerage accounts right now. How much of your growth is sitting completely exposed in traditional taxable buckets? If you don't know that number, you're flying blind into a storm. You need to look at your unrealized gains and calculate the exact difference between your current tax bracket and the projected 2026 brackets. If you realize that a 4% increase in your bracket translates to $10,000 vanished overnight, that should shock you into taking immediate action. Step 2. Stop blindly maxing out the wrong accounts. Why are you aggressively dumping cash into traditional structures that are guaranteed to get hammered by compressed tax brackets in 2026? It's time to pause, reassess, and redirect that capital flow. Millions of Americans are completely on autopilot, letting their corporate matching programs dictate their entire financial destiny without realizing they are funding a future tax liability that will cannibalize their retirement lifestyle. You have to break the cycle and take active control of your distribution channels. Step 3. Divert that liquidity into the shelters we just broke down. Whether it's initiating a strategic Roth conversion or shifting active cash into alternative, off-grid assets, you need to move the money while the window is still open. This requires coordination, precision, and moving with speed. Every single dollar you leave exposed over the next 18 months is a dollar you are willingly risking to a system that is desperate for revenue to fund its spiraling debt commitments. I've dropped the direct link to the official IRS policy breakdown in the description below, so you can look over the exact data with your CPA. The government is betting on the fact that you're too distracted by the daily news cycle to notice this deadline approaching. Are you going to prove them right? If you're ready to secure your wealth milestones, drop the word protect in the comments right now so I know to drop a deep dive video on the exact forms you need to file. Don't wait until the system resets and forces your hand. Secure your capital, make the pivot today, and I will see you in the comments section below.